Today's lesson, real deal, is going to be short squeezes. Why? Because there's been a few of them recently. It's been a hot minute, but it seems like some of these are going to be back into play. So for anybody that doesn't know what a squeeze is or what a short squeeze is, essentially it's a situation where a lot of people are betting that a stock will go down. And then when it has to go up, when it goes up, they got to cover. And then you get cascading pressure on a stock upward because there's not a lot of available liquidity for people to cover their shares. So what's the first condition of a short squeeze? I mean, you got to be able to know that there's actually people that are short the stock. I know it's simple, but you have to start with the basics. And I just pulled trade IDs up here, and the example is going to be Lucid because Lucid is squeezing right now, at least has been the last couple of days. So you check the short float. Double digits are good. Over 20% is, I'd say, very good. Things that get into the 40 and 50% range are insane and have a lot of potential. In and of itself, a high short float does not mean that a stock is going to squeeze. That's not how it is. You need some things and some catalysts to get the stock to start going. But it is a start. You're not going to get a short squeeze without people looking to cover. But there is another way a stock can go in a similar fashion, which has to do with the available shares in the float. So even though you might have a low short float, you might just have a float sometimes that is very small. Let's say you have a low float name, only 1 or 2 million shares out there. Even if it's not a huge percentage of it short, there's just a simple lack of liquidity. So when the stock goes up, there's a lot of pressure as there's nobody to punch out on for the people trying to cover. And they got to buy back, and that means there needs to be a seller. And if there's no available shares for either reason, whether it's too many shorts or whether there's a lack of liquidity, both these things are going to, one of those things is going to be required for a squeeze. So how do you make profit off it? Well, as stated, if you need people to be short for something to go up, the other thing that you need is for people to start covering. And if you look at any stock, and I'm using Lucid as an example, I don't want anybody that's invested or loves Lucid to at me here, but if you look at any of these names that have high short floats, you're typically going to find something like this, where the stock is just trend down forever and ever and ever, and every single pops looks like an absolute golden short opportunity, which is exactly the case here. So what causes something to start squeezing? You need people to look for reasons to cover. Maybe it's a consolidation bottom, a double bottom in here back in June 2023, and then it starts going up. But you don't even get a parabolic move. Now, what happened recently in Lucid, I think, gives you a good example of it. Look at all the red. You've got at least 2 or 3 weeks worth of downward pressure on the stock into a double bottom. That's a ton of pressure. The other thing that happened here is you actually got a bit of a catalyst. Not directly. I mean, there's some news around Lucid, but let's be real. Tesla had earnings and tanked. Lucid went with it. So did a lot of the EV names. Tesla made a bottom. And then you had a big move to the upside. So you did have a double bottom. You had a bit of a catalyst in that Tesla made a big bounce, putting upward pressure on some of the EV names. And then you had a break to the upside. Well, woohoo. If you were able to catch that first day, great opportunities for longs. It started squeezing. How do you take advantage? Okay, well, people might cover at a double top. So they might cover there. People are going to cover at key price levels. But once it's already gone, what are you supposed to do with it? I want to talk to you about day 2 type plays and a couple of the reasons why this double top turns into what I think is an easy squeeze entry, the upside. One, anybody that saw the first day of buying back explosively that's short is saying, will it continue? If it does, I might want to cover my short. People can be short at $15, $10, all those prices and everything in between. But what happened at the end of the day is key here. Look at the volume creep back up. So it pulls back, Lucid, squeeze names will do that. If they go up explosively, they can come back explosively as well. You got this push, and then when it got back to the highs, you had increased volume at the top again. So lots of strength up at the top, holding higher lows, holding the trend on good volume. If that volume's not good and you aren't having people buy en masse up at those tops, late money's the money that holds overnight. That's going to be a key. So that's what you get. You end up closing and then opening right around the same top. If it's all the way down at 3, it's got work to do to get up to that double top. It's a breakout entry because that's where a lot of people are putting stops. It's an obvious area for it to go. And if you want to look one more step out in the future, what would I be looking for next? Same pattern. Can Lucid hold on to 360 to 380 today? Can it get back up above $4, which is the 50 period, which could cause another bit of a squeeze? Were it to take out something like a 530, I think that could be an explosive level. I want there to be buyers above, scaring the you-know-what out of short sellers. So you've got to have those factors in there. I always like to have a target. I want to go from A to B, but once it hits B, I want to think about B to C, C to D, all that good stuff. Take it in steps. It's going to be, there are going to be pullbacks. There are going to be explosive moves in either direction. You don't want to get caught holding the bag thinking every single squeeze is going to be a GameStop. But there's a couple of other things that you can consider here. Everything is relative. It's all well and good to say, okay, well, we know Lucid has a good short float and things like Upstart have over 40% and Carvana has a good short float. But I'll give you something that you don't usually think about, a name with single-digit short float. Now, SMCI is a $30+ billion market cap company. Now, larger cap, mid and larger cap companies don't always tend to have more than 2-3% short float can be a good amount. This is 9%. So 9% short float. It also has many on every single day. Some of the chip names have a catalyst, being a chip name associated with AI. That can be one, and it's shown you explosive movement in the past. So one of the things that you've got to consider is it's all relative. Tesla will go crazy because there's a lot of people that short it in options, so it'll get like a gamma squeeze. Something like Lucid, it's simple. The raw shares are shorted. GameStop, it's simple. SMCI, 9% is gigantic when this stock is doing triple ups in 2023, and when it's doing essentially almost a double up in just 1 month, and then it gives good guidance. This, on 5% short float, this is a bit of a squeeze. That's why you get it moving 20% on revised guidance. And then a day like today, where it's going to have its earnings and everyone's expecting it to do the same, well, the volatility is going to be absolutely through the roof. But why I want to show it to you is remember what I just talked about, where you've got to have shorts covering. Shorts need to have a reason to cover for it to make that next leg up. What did Lucid do? Lucid broke out a new high. SMCI, in attempting to open, breaking out the post-market gap, it failed that level. If you don't put the shorts to pressure in the open market, there's not much of a squeeze that can happen. And it's a weird thing to say. Like, I would have been more exciting buying SMCI breaking out the top than I would have been trying to pick a bottom. Because one of them fits with the squeeze narrative, and the other one is just trying to catch a technical dip buy, which if you had it, great, congratulations to you. So SMCI does fall into this category, but you've got to always remember, catalyst is a part of it, short float is a part of it, shorts actually covering and running to the exit at the same time is a very, very large component that you need to fill. So when that doesn't happen, note that these names can and will pull back really significantly. I don't know how many times when everybody wanted Carvana to go a million times in the last few months, it just wouldn't because it wouldn't take that next level up. So try to remember, you've got to be taking out tops and there have to be buyers incrementally to get that type of a squeeze. Obviously, the trend is going to be your friend a lot of times, so you want to see it stair-stepping to the upside. Everything about SMCI would have pointed to, on an earnings beat, this could be a runner. But it's actually given up 10% because the buyers couldn't take out the top. So anybody that was shorting it or still holding shorts, they put their stops at okay if it holds above the aftermarket high or if it breaks the pre-market high. None of those stops got run, and you've got to factor that in. It's not always just about finding that name with the high short float. You need to see it take out tops. Can Lucid take out this high tomorrow? I don't know. But if it's unable to make fresh highs and hold higher lows and all that good stuff, then I don't need to be involved every single day. But while the squeeze is there, you want to take advantage of it. So make sure you do your homework, know what has a short float, know what has a low float, make sure it has some kind of a catalyst. You'd like to see the extra volume, and our stops getting run. What would you do if you were short that stock? How would you be feeling? Would you feel comfortable about it? Would you have stops, or we're looking at potential stop areas? If there's nothing that would have gotten you out of short, then why would a stock squeeze? So make sure you're looking for the right things. That's the real deal. Short floats can be short squeezes can be very, very lucrative and a lot of fun. You just have to make sure it actually squeezes.